Hopefully you guys can hear me. Let me know if you guys can hear me. Okay, perfect. All right, good morning, guys. Today is Wednesday, November 29th. No, we haven't had a live session in a minute. So let's see what we have today. So regarding daily bias for US 30, bullish, daily bias for gold, still bullish, daily bias for EU, bullish, daily bias for the US dollar, bearish. So looking at what we have today, for US 30 on the 15-minute time frame, there really isn't any, I don't see any trade setting up for today, based either off of the momentum or the SARs. On the 30-minute time frame for US 30, see, it's interesting. Okay, there it is. So here for US 30, nothing on the 30-minute, nothing on the momentum. Actually, momentum, this is a valid momentum entry. So what I'll do when US, but it already picked that up because if you guys see, it came back, picked up that momentum and went up. But we do have this other momentum that's down here. But that was also picked up previously here. So these momentums have been used up. So this has been used up because momentum printed here. The next candle came, picked up that momentum and shot up. This momentum was printed as that too. Price came back down here, picked up that momentum and spiked up. So even for the momentums on US 30, those have already been used up. So I don't see any trade for US 30. Of course, the one day I come back on the live session, don't see any trades for US 30. For gold, all these momentums are invalid. There's no rejection off of SARs. So the momentum buys are invalid. Here we do have a double SAR. This is on the 15-minute time frame. So this can possibly be setting up for a break and continuation entry on the 15-minute time frame. On the 30-minute time frame for gold, we don't have any SAR entries or double SAR entries unless we, give me 1 second. Yeah, gold hasn't been up here in a minute, so yeah, we don't have anything there on the 30-minute. All these buys are invalid on the 30-minute time frame. So here for US 30, possibly going to get a break and for gold, break and continuation of this 30-minute time frame, but you would have to wait for another 50 minutes because even this 30-minute candle has not closed just as of yet. Actually, I'm sorry, that's a 15-minute. So go back to the 15-minute time frame. So we might get something here on the 15-minute time frame for gold. 30-minute time frame on gold, there's nothing. EU, this is a test and rejection. The blue zone is a 15-minute zone. So this is test and rejection. So we might get something on EU. So what I'll do here, I'll just mark this up. But of course, price is overextended, so you'd need a retracement. So, but I'll just mark this up. So this is EU, and this would be test and rejection right there. Test and rejection buy in the direction of daily bias. So what we want to see here is for price to come down, and then that's what we want to happen for EU. But also we need this candle to close because we also need to mark up where somebody would be setting up break even if they took the trade upon validation. But that's EU on the 15-minute time frame. Right here, 950. Let's see, 950. Nope. So this is another double SAR on the 15-minute buy right here. On the 30-minute for gold, this momentum buys are invalid. There's no rejection off of any SAR. When we go to the 30-minute, even if we have any momentum buys, they would be invalid as well because there's no rejection off of an SAR. So these buys are, yeah, the buys are invalid. Let's see, so EU, we can only do the 15-minute time frame for today. So we'll go to the other larger time frames and see what entries there are. Let's see. Okay. So let's go to this candle closes in 2 minutes, so we'll come back there. On the hourly time frame, we wait. We should. This is a break continuation. So there's a US 30 trade running. I'm sorry, I was working on coding this morning, so this is my first time looking at all of these things. So this is a break and continuation entry, and I'm pretty sure the trade, we might get it. Let's see, so just a moment, bring to front. So break and continuation entry, of course, entry would have been a bit overextended, so you would have waited to enter on the 1 minute time frame. Yeah, so here, of course, this one I wouldn't have entered it on validation because it was right before New York Open. But right now, if we go down to US 30 on the 1 minute, I want to see if that entry is already gone. On the 1 minute entry, we would want to see a live 1 minute entry for US 30, live 1 minute SAR. So it came up there. Okay, give me 1 second. So the SAR zone 35,464, you'd have wanted for testing of that zone. Okay, so this would have been, and what time did this come in? So this would have been that entry I would have taken after market open somewhere around here. So I'll probably get into this trade because that was the trade. So we can wait for another 1 minute SAR because this is based off of the hourly. So it's either you can choose if you want to just hop on this trade as is. But for me, I'll wait for another setup. But that would have been the trade I would have taken because this was the trade. If you entered it before New York Open, which I don't recommend anyone trading before New York Open, you'd have been stopped out. If you waited for the 1 minute entry, trade would be in drawdown and almost getting stopped out. So at this point, let's wait for possibly another break and continuation. But I do see US 30 coming back up. But I want to see if we get another 1 minute live SAR, in which case I probably will be taking that. For gold, nothing on the hourly. EU, nothing on the hourly. Here there was a break and continuation. Let's look at that EU trade. So here for EU, this is what we want. But then we need to know at what, because this is where the trade validated. So I need to know at what point would this person achieve a 1:1 risk to reward, because again, it's a 15 pip stop, 30 pip stop loss. So if you guys, that's the validated trade, but the red flag is overextension. Remember, for me, I'm using a 15 pip stop on EU. So, and I want my stop loss to be below the SAR level. So for me, I would rather wait for price to come here, and then I find an entry on the 1 minute time frame. But I drew this arrow in order to know if price gets to this place first before coming back down to me, then I go ahead and forget about that trade, because the person who entered it would be at break even. So nothing for gold on the hourly time frame. Let me try and align this hourly. 35,477.5. 35,477.5. 477.5, somewhere there. All right, so nothing on the hourly for any of these instruments. On the 4-hour time frame, so 4-hour time frame should be the green zones. So we had a break and continuation yesterday, break and continuation. So nothing on the 4-hour time frame. Nothing, no green zone, no 4-hour time frame here for gold. For EU, no 4-hour time frame. This is 651. This is 519. Yeah, so no 4-hour entries with this instrument. So the only trade we'll possibly be taking today is this US 30 buy or that EU buy. So if I do get a live 1 minute SAR entry, I'll possibly be taking that for US 30. The other one we can check is the momentum entries. So for US 30 on the daily time frame, there's no valid momentum that's nearby worth looking at. Here we do have a daily momentum buy, but price has to come back all the way back to 35,063. We have another daily momentum buy at 886. So price has to come back all the way there. So this one's I'd checked yesterday. So I think I would rather just check the 1 hour time frame for the momentum, because that's probably what has changed between yesterday and today. So let's review this. So here I'll apply the moving average filter, since this is an hourly time frame. Same thing here. Moving average filter. So you can see for US 30, no valid buys after you apply the filter. Same thing, no valid sells. If we go to the 4-hour time frame, uh, 4-hour time frame, there's this buy right here, but price has to come back all the way down here. Let's even see if this is valid. So 1, 2, 3, not really, but price has to come back all the way down here. For here, for the sells, the only valid sell momentum is 1, 2, 3. This one right here. 1, 1, 2, 3. So either this one, 35,343 is, so I'll add an alert there for myself. I need a 1 minute live SAR. This one here is a valid one. So this is daily sell momentum for US 30. There's another daily sell momentum here, valid. That's right here at 35,300 area. Actually, this is not daily. I'm sorry. 4-hour. Create. This is 4-hour. Sell momentum. Okay. But US30 has to come back all the way there. So if US30 gets to 35,341.5 or 35,304, you do expect some heavy selling to occur from that area. But I just set up my alerts, so I'll get, they will get triggered once price gets there. No filter for that. All right. So right now, either this US30 trade or this EU trade. But if you guys have any questions, let me know. Let me see if I can load that indicator. Well, there's this so this indicator I told you guys about. So this is, this should help you guys with, so if you guys remember when I told you guys, it's based off of this, right? So based off of this, oh, and now that I remember, if you guys have my indicators, you have the GA Trading Club bias indicator. So I know some people wanted the signals to be printed on the screen, because for me, I was just looking at the daily closure or the last SAR closure. So here you can see that, and I guess we can go on let me just do that on a new screen or a new chart. New layout. So I check on this US30. New layout. See. Not for US30. Let's do gold. And we will just apply the bias indicator. I was hoping would have gotten a 1 minute by now. Apply the bias indicator. So by default, I think by default it comes color coded. But for me, what I did, I just turned off, if you go to the style, I turned off buy line, sell line, PSAR, because I think by default it comes like this. Yeah, by default, if you load it on the chart, it comes like this. For me, I just don't like my my charts to have too many colors. So you just remove this. It's not going to affect anything. Remove plots background, because by default, this is how you want it if you want to use it as a bias confluence like I do. So once you do that, so the idea is if it closes above a live SAR, because remember, this one you're using for bias, so you don't extend your SAR, so you just leave them as default. Default is 5 candles. So for me, based off of how I'm using it on the daily or how I used to use it before applying the signals on the daily, if price closes above a green live SAR, my bias is bullish. If price closes below it, my bias is bearish. Simple as that. So that's what this indicator gave you guys. So for example, you can see here, price close above here and you got a buy. When price close below this sell SAR, you got a sell. Now, the other part with this indicator that's just has a slight difference based off of how I interpret the SARs. It also has the color code, the candles are color coded based off of support and resistance. So if the trend is bullish, the candles will be green. If there's consolidation in the market, the candles will be black, and you can change that in the inputs here. You can see PSAR by bar color. So that's what changes the candles to be coded either by trend or by consolidation. So if you don't want that, you can take that off. But if you see any black in here, so for example, for those of you guys who trade consolidation, if you see any black candle, then price is consolidating. And if you guys use any EAs, that do consolidating, which probably some of you guys we met in such an EA, you can do consolidation in there. But again, it's not always accurate. But for me, I don't use it that way. But that's the thought. If a candle is black, then price is in consolidation. If candle is red, then price is trending downwards. If candle is green, price is trending upwards. Now, the only other signals that you will get other than closures above or below the live SARs, if you can see here, this buy formed, but there was no closure above. Okay, wait, let me see. If this closes, I'll be buying US 30, 0.75% risk. It will be an official trade, 0.75% risk. It's a bit high up there, but this is based off of that 1 hour that you guys, that I showed you guys. So for this trade, 6, 5, 4, 3, 2, 1. All right, I'm in the US 30 buy right now. 0.75% risk. Personally, I'm doing 1% because that's what I risk nowadays. This trade was based off of this hourly. This hourly that I showed you guys. If you did enter when it was a bit lower here, you should be fine. Or you can wait for another hourly setup. But this was based off of this break and continuation of a double buy on the hourly time frame. And ideally, you can see we are getting the same entry because this was the original entry right there that could have gotten, just faked out. So we are ideally getting the same entry area. But let me go back to that part. So the only difference with the buy and sell signals, because there's two kinds of buy and sell signals. So there's the ones that fire when candles close above or below the live SAR, which is what you want to use for bias. But on the other hand, for example, during this whole uptrend here, you can see here, this is when personally I change my bias on gold from bearish to bullish, right? So we got that buy signal. But what happened the next day, you had consolidation, which came up to pick up that liquidity, and price went back up, right? So again here, candle closed above the SAR, gave you that buy. So this whole time, price was bullish on the daily. But you can see this black candle. This tells you what? Tells you consolidation. And I think we might go to the all-time high on US 30 today. So that's what I'm trying to write to also for that buy I just took. So here, price started consolidating. That's the black candles. But you can see again, we fired a buy signal here again on the daily. Now, this buy signal, it wasn't based off of closure above a buy SAR, but it was based off of after consolidation happened, what direction will price break out? So if price has been bullish and it starts consolidating, then after consolidation, price will break up either to the upside or to the downside. So after consolidation here, price broke up to the upside, which is why you had this buy signal that fired. Again, I'm not going to be using this buy and sell signals that fire after consolidation. For me, this indicator is only for bias. I'm only interested in it for the candles that close above or below live SARs. If you guys want to use the signals that come up after consolidation, that's up to you. But that's not what I'll use this indicator for. I could have only done so much because I wanted to give you guys buy and sell signals for bias. The other thing that this indicator does, it gives you the price point of the live SARs. So here, when this live SAR, if I can just do a bar replay for it. If I can do a bar replay for it. So this was before the live sell SAR printed. So if we go to the next candle, that was a consolidation candle, then the next candle. Okay, so when this SAR was printed, this is the price point, 1976.2548. So if you are looking to trade such, what you can do, you can set like a sell stop here because price has already close below here. So ideally, normally what you'd expect is for price to do this and come back and pick up liquidity and do this. It doesn't always happen. Price does not always go back to retest the SAR, but that is the purpose of these labels. Again, same thing here for this green SAR label. This green SAR was formed at whatever price this is, 1873.19. So if you hover over there, you can see it's around the same value. So that's the value of these price labels. Again, if you don't want them on your chart, just go ahead and turn off the SAR labels and they will disappear or they'll get removed from the chart. But for those of you who trade with limits, buy and sell limits, and those would be nice areas to trade, like FOMC, NFP, etc. Yeah, but that's the bias indicator. For me, I don't need to use it because for me, ideally, I just look at the last closure above or below a live SAR. But with this indicator, it does give you that, and you can use it for bias. Now, I think that's it for this one. And I did share it with you guys who have access. Now, this is the next one that I'm doing. So this is also based off of that bias indicator. But what this does, so if you guys remember for gold, and I did tell you beforehand, I told you before I was doing it, I told you guys when the bias changes on that day that the bias changes. So for example, here, Tuesday, November 23rd, my bias changed from bearish, because if you guys remember, I was actually anticipating a head and shoulder on gold, which actually did not, was invalidated. So I was actually anticipating this on gold. But for me, right, you just follow price action. If something gets invalidated, you move on. But on this day, my bias changed from bearish to bullish. So on that particular day, when your bias changes, that is the day that the probabilities are high for you that the price is going to go in that direction. So there's one of two things you can do. On that SAR that caused your bias to change, you can either set a pending order. So in this case, the SAR was at 1984.459. Because remember, on that, after a bias changes, you do expect some sort of retracement back down. It doesn't have to come back to the, sometimes it will come to the SAR and move back up. Sometimes it will even break down, but not close below the SAR, as we probably seen with EU a few days back. But the idea here is that you can either put a pending order here, either put a pending buy order, or what's the next best thing you can do? The next best thing is trade with me during the live session, like how we're in this US 30 buy. But for that, based off of how I trade, it's using like what? I use a 1% risk. Maybe you guys use a 0.5, 0.75. You can easily get stopped out. Now, the other one, what's the next best thing you can do? So here, if you knew, and I knew gold was going to go up. So since I knew that, yes, I was still trading the live sessions. I was still taking trades on my own. But what was the next best thing? The next best thing, what if once you change your bias from bearish to bullish, from bullish to bearish, whatever, what if you can start accumulating small lot trades in that direction, which is what I did right here. So here, on the beginning of this daily candle, you know what I did? I started accumulating, use any strategy. I've given you guys like 7 indicators. I've given you guys like 7 indicators. Accumulate buys based off of that. You can go to the crosses indicator. Crosses is one of the ones I use to accumulate those buys. When was this? Tuesday, 21st November. So if we go to Tuesday, 21st November, that was the closure of that. I started accumulating all these buys. All these buys right here, I was in all of these buys. All of them, I was in them. Now, I started accumulating buys right here on the first day. So you want to accumulate small lot buys or small lot sells, depending on what direction that you're getting in. But the key thing is you want to understand that after your bias changes, price, we do expect that retracement, which is normally why I give you guys that 7-day threshold. And actually now I'm shifting it down to 5 days threshold because ideally, we trade 5 days a week, not 7 days a week. Excuse me. So after that bias change, you expect retracement. So as much as you're accumulating here, for example, I was accumulating those buys, I was expecting worst case scenario, gold would come back to 1984.336. So what was the range between this daily candle closure to 1984.336? So that was a $15 move, a $15 move, 150 pip move. So I needed all these buys that I was accumulating right here. I needed to survive this move down. So like for example, on the E8 account I took it with, I took it, those buys, max drawdown, if I go to the next day right here, because this was the lowest of the retracement, my max drawdown here was about 2%. So normally for FX, for even using a bot or anything, especially if you're using bots, you don't want to go more than 3% loss in any given day. I might change that when I release my bot, but I was playing around. I didn't want to go beyond 3% drawdown. So right here, if you're accumulating those small lot buys, that's why I tell you, use small lots, because if I think I was using 0.2 lots per trade. If I used 1 lot per trade, I wouldn't have survived this drawdown. I would have automatically gotten stopped out. And guess what happened? The next few days, price reversed up. So for me, actually, I closed out all those buys that I was in. I closed them out, I think, at 2018. I closed them out on this day, Sunday, Monday, Sunday, whatever, during this spike. I closed them up around 2014, 2015. So during this whole move up, you know how much my buys were worth? They were worth 5,500. So I actually made 5,500 with small lot trades. Now, if I would have held higher up until when it got to 2054, I would have made like 10K or something. So that's the other part. So the reason I'm saying that is because this new indicator I'm creating. So for example, here, what you'd need to do, and once the indicator is out, I'll also go over it again. You would scan all these instruments. So choose what you want as a daily bias. So you can use the 4-hour time frame. You can use the 1-hour time frame. You can use the 30-minute time frame. Personally, I'm going to stick to the daily time frame. So for example, here, let's just pick one thing. Let's pick CAD JPY. So CAD JPY on the daily time frame has a sell. So this is it right here. So you would want to monitor this buy and sell signals, and ideally at the end of every daily closure. Because here for CAD JPY, so if we go to CAD JPY here, my Chrome keeps freezing. I'm sorry guys. Let me bring this thing. Let me bring my trading view thingy. Okay. So not sure if you, let me stop share and share this application. I don't know, my Chrome just freezes randomly nowadays. So I'm sharing trading view. So this is the indicator itself. It still needs some last minute tweaks, but here, if I go to CAD JPY on the daily, it's a sell. So I want to monitor CAD JPY, and I want to catch on that day it created the sell. So here, if we go that, and think I've put it on Oanda broker, and US 30 is coming back down, so we might get stopped out on that US 30 trade, which is fine, but I still do expect US 30 to move back up. Let's see if this, okay. So CAD JPY. So CAD JPY, the last signal was a sell. So here, what you would do, let's say you have an EA or whatever, especially like when I have my first, when I release my EA. So what you would do, you would start accumulating sells on CAD JPY. So you'd accumulate sells this whole time. So this whole time you'd have been accumulating sells. You know, in most days, you want to accumulate the buys or sells either on the first day after the bias change, or also on the second day. I would recommend you guys to trade this on fast moving instruments. I really haven't tried this small lots on like FX pairs, but it still works the same way. With FX pairs, you just might take a bit longer to hit TP. That's why I like sticking to gold, Bitcoin, US30, NAS, or whatever. So here, you'd be accumulating small cells, just small lot cells here. And then here I do anticipate CAD JPY to keep coming back down. So you want to stack up on the cells during retracement. So always know that once the daily bias switches from whatever bearish to bullish or bullish to bearish, always expect retracement in the opposite direction for them to pick up liquidity or for them to pick up their pending orders. So that's why you want to stack small lots right there that can allow you to survive any retracement. So right now, of course, I wouldn't be looking to sell CAD JPY because anybody who used that strategy I'm telling you about has already stacked up sales and possibly is in even bigger sales from the top here. So you can also use this as, intervene manually. So if you've been stacking up, I don't know, I need to think of how many lots I'll be using on FX pairs. So let's say you've been doing 0.05s on CAD JPY here, and then it gets to day 5 here during consolidation. Maybe you can put in a 1 lot sell up here at the very top so that it supplements all those small lots that you did right there. Let's look at another one. I know EU has been buying for a long time. I don't think we'll catch. Let's see USD CAD. Unless something changed like yesterday, I don't think we'll see anything. But ideally, you'd want to be looking at this indicator on every daily closure. So right here for USD CAD, the other thing you guys want to do, I'll go over it on the other indicator. So this was a sell right here. I know it's not showing, but I'll show you guys how to change that because we need to change the moving average. You'd rather use, instead of 20, just use the 9 EMA. But right now, so this would be a sell on USD CAD. So same thing with USD CAD. Once you make that tweak, and I'll show you guys on the other setup here, when the bias changed from, actually the bias on USD CAD did not change because it was always bearish. But when this daily candle closed below this live SAR, then you would, and I just got stopped out on US30, you would be stacking up sells right here on USD CAD, during this first day. And right now you'd be riding, the USD CAD sells down. But that's the idea behind that. Let me see if my Chrome is back because it literally froze. Yeah, I think it's back. So I'll just stop sharing. If you guys have any questions, feel free to ask. It looks like this month might be the first month we end in a loss, in an overall loss. But anyway, let me share. I think my Chrome stopped freezing. So US30 got stopped out on that. So here I'll just take, so this month we're down minus 1.375. Tomorrow is the last day of the month. So this trade was minus 0.75%. Actually, today's Wednesday. Yesterday we didn't trade. I wish we did a live session. Yesterday I had like such a nice win on US30, but yesterday, actually I took like 5 trades, 4 trades that were all winners. But here we're just marking up the official trade. So unless we get any other trade set up today and tomorrow, I really don't want to push this. So this will probably be the first losing month since we started, which is fine. We're not going to win every month. But yeah, if you guys have any questions, feel free to ask. For you guys who have the bias indicator, change the moving average length here from 20. By default, it comes as 20. I might change that in the coding, but change it from 20 to 9. So if you change that, and if we go back to USD CAD, you'll probably see that daily signal fixed. So if we go here on USD CAD, yeah, there it is. So on the other setup that was on the TradingView app, this cell was previously here, but you can see this cell is where it should be on the closure of the SAR. So change the moving average length to 9E. I think it's EMA or SMA. I don't know whether it's EMA or SMA, but just change this to 9. You can leave the other things as default. So that will give you those buy and sells based off of the candle closures. So here I still expect US 30 to push up. So keep in mind, so the all-time high is about 35,600. I still expect US 30 to push up. So personally, what time is it? 10:15. I might be ending the live session soon, but personally, what I'll be doing, if we go back up here, in the next 43 minutes, I do see this hourly candle closing above, coming back and closing above here, in which case that would be a test and rejection entry. It would be a test and rejection entry. Give me 1 second. Just 1 second. So this was break and continuation. Then this became a test and rejection. Actually, there's another setup for US 30. So this was break and continuation. The trade that we got stopped out on was break and continuation. This is a test and rejection entry. Test and rejection buy. Test and rejection buy. So let's see. Okay, so hopefully you guys, so this one we got stopped out was break and continuation. So the continuation candle became the test candle in the test and rejection setup. Bring to front. So test, rejection. So the entry for test and rejection, of course, would have been up here, but would have been overextended. So we wouldn't have taken that trade. So there's actually a trade setup on the 1 minute. So right now you would wait for price to retrace down here and go down to the 1 minute. So again, if I do get another 1 minute entry for US 30, I'll be taking that also as an official trade. But if you did take the loss with me on US 30, this particular entry, if you did use 0.75% risk, use 0.375% risk. But I still expect US 30. It's just, we are so close to the all-time high, so I do expect that to hit. And we don't have any heavy news this week. I think only unemployment claims, which is a weekly thing. So by heavy news, I mean we don't have FOMC, NFP. So I'm still going to take that. If you did take this loss, use 0.375, because if you use 0.375 and this trade hits TP, you'll actually get back this trade. So you'll be back at break even. If you lose this trade, you'll only be down minus 1.125 for the day, so which is not bad. So I'm still looking to take this trade, and this trade I'm looking to take is based off of a test and rejection entry, which would be this way. All right, let me know if you guys have any questions. If not, I'll wait for this 1 minute entry and see if it validates and take it. If not, if it keeps going down, then it is what it is. We'll just have to look out for it after the live session. But this is the importance of just understanding the strategies, because yesterday I was up 10K. We didn't have a live session, but and all I do on the live, even when I'm not trading with you guys, I apply the same things. So if we traded on the live session yesterday, we would have had a winning day on this US 30 trade that I took here. But today we're on the live session and we just took a loss. So if you only wait to take trades when I am on the live sessions, you might fall on the days that I do take a loss on the live session. So that's just the importance of just understand how to apply. And it's, I've given you guys all these tools that hopefully makes it easy on you guys. And I literally do the same thing that I go over here on the live session. For EU, so EU is coming back to entry. So here on EU as well, I'll go down to the 1 minute time frame. So since I'm going down to the 1 minute time frame, I do not want extension. Audrey, that system is still running. I forgot to turn it off. So I know we're almost done, halfway done to your face too. Let me know if you want to turn it off or just keep it running.
All right.
Keep it running or turn it off. I mean, we should be good. I mean, it is what it is. We are almost, I think we can get you to like 3K or something. Yeah, but if you guys have any questions, let me know. I'll turn it off at 10:30. If you guys have any questions, let me know. So here, EU, I'm looking for a 1 minute setup. So I've already taken my first loss of the day. So at this point, I'm remaining with one more trade for the day. Because remember, for me, I do 1% risk per trade, and I have an allowance of 2 losses in a day. So I've already lost one. So it's either I'm going to take this US 30 trade or take the EU trade. So the best thing that can happen is for this US 30 trade to validate, and it goes to like 1:1 risk to reward. And I go ahead and set break even. And then I would take the EU trade, because worst case, I would get taken out at break even by US 30. And even if I would lose the EU trade, the EU loss and US 30 loss would be my 2 losses for the day. But I would want one of these two to validate. So whichever validates first, I'm going to take it, and that's gonna be it for the day. If you guys have any questions, feel free to let me know. For that SAR indicator, that last one, I should have it out today, hopefully, if not tomorrow. The EA, now that I just remembered. So I sent an announcement yesterday. This is the announcement of the EA. So if you haven't already and you're interested, again, I'm not I'm not forcing anybody to take the EA or to use the EA, but if you're interested in it, all the content will be in Google Classroom. But you have to fill out this form. You have to fill out this form, fill out your names, give me your Gmail, and then you have to agree to all these disclaimers. So remember, nothing is guaranteed. I did show you its performance, and it also does take losses. If you do decide to not follow the strategies, you lose a lot. Even if you follow the strategies as we follow them here, you'll still lose, but the losing days will be fewer than the winning days. You'll ideally win more than you lose. But the thought process is, it's not a magic bullet. It's not the holy grail. There'll still be losses, whether you're using the strategies, whether you're not. So this is why I also need you guys to acknowledge all these disclaimers, just for legal protection for myself and also for you as well. So once you do this, so I already customized. Right now, I think I've customized and branded the EA. I think I sent screenshots yesterday. That's yesterday. So this one is it right here. I named it Trend Genius Pro. I may decide to change the name. I don't know. Again, this will be offered on the MQL5 marketplace. So MQL5 will take care of billing, will take care of licensing, and all of that good stuff. So if you don't already have it, create an MQL5 account. Go to, I think I put that as well. Maybe I pinned the messages. Probably, maybe. Yeah, so this was the pinned message right here. Yeah, this message I sent on here. So go ahead and use this link to create an MQL5 account, because that's where you'll download and set up the EA. I'll do video recordings of how to use the EA, and those video recordings are the ones that will be stored on Google Classroom. So that will be where I record everything. So right now I've already finished branding. I just need to record how to use the EA. I currently have a cold, if you guys can't tell. So I'm hoping to hopefully be feeling better in the next day or two, so that I'm able to record pretty clearly. Yeah, but if you, again, not a requirement. This is only for the people who are interested in it. The other part, I know I'd mentioned that I wanted it to be free, but in the MQL5 marketplace, the free option, it doesn't work with what I want to do. So unfortunately, this will be paid, but the first 2 months, so hopefully we can get this out next Monday. So the first 2 months, December and January, so the lowest price you can charge on the MQL5 marketplace is $30 a month. So that's what I'll charge for the first 2 months. After end of January, so beginning February 1st, the EA price will increase to about $130 a month. So between now and end of January, your work will be to test the EA and see if it makes sense for you. So other EAs out there, they give you like a one-time payment option for like $500 or like $1,000. But for me, you can just spend $60 for the first 2 months and see if it works for you. If it doesn't, then at least, right, you didn't pay me $1,000 or $500. You can use that money for something else. If you do see it works, and for me, I told you guys, I'm using it to my Fund Your FX account that I'm hoping to scale to $1 million. That's the EA that I've been using to scale up. I'm using it on my funded accounts. I'm using some of my funded accounts. I'm using it on other accounts that I'm using to demo and stress test. So I do know that it's working. So afterwards, even when the price increases to 130, I would want you guys to treat the EA as your partner. So yes, you can pay 500, right? Other years, they tell you, okay, pay one-time fee of 1,000, pay one-time fee of 500. But the EAs don't give you the support they should, or you just, like personally, because I've worked with a bunch of EAs in the past, what I would do, I'll just forget about it and be like, okay, I'll just count that $500 or $1,000 that I spent as a loss, and then I just forget about it. But if you have something that you have to pay $100 a month for, $200 a month, $300 a month for, then it would make sense that you'd put more effort into learning how it works, and then, because it's gonna, trust me, it's gonna give you a ton of money. Even by this strategy alone that I've given you guys a bunch of strategies right here. Even by this strategy alone of stacking cells only here, it would have made you so much money. So the idea would be every month you pay the EA $130 for helping you make, I don't know, 1,000, 3,000, and all. Now, the other part, so I do know it does take a while to get funded. Even with this EA, it might also take you a month or 2 or even 3 months to get funded. I don't know. I'm just guessing. Depending on your risk, I'm a very conservative trader, but yes, it might take you a month. If you're a risky trader, it might take you maybe 2 weeks, maybe 3 weeks to get funded. But for the people who are conservative traders like myself, that maybe would take a month or 2 or 3 months to get funded. So beginning next year, we'll be starting a challenge passing thing. So if you guys have looked in the Discord, I've been talking about it a lot. So the first one, and if you guys heard, I was talking to Audrey about an account I'm doing for him in phase 2. So the first one we'll be doing is HFT challenge passing. So that's with a totally different system that I have. So prop firms like Next Step Funded. So I'm currently with Next Step. I have accounts with Next Step Funded that are passed. The Audrey's account that I'm working on is Next Step Funded. And I actually just got affiliated with them. But we'll just be doing those. So Next Step Funded, I know there's Infinity. Now, I know there's an issue with some of these prop firms that allow HFT, that sometimes they don't pay out. And other times it's hard to reach support and all of that. But for me, to be honest, I've never not gotten paid out by a prop firm. If people find that they're not getting paid out, I'm almost sure I can tell why they're not getting paid out. It's either they're being they're being greedy, they're trying to make too much, they're copy trading. So the prop firms that I'll select, I'll be able, and like right now I'm affiliated with Next Step Funded, so hopefully I should be able to also work with them in case we get payout challenges. But for the people who say that they're not getting paid out, I am almost sure there's, sometimes, yes, it's the prop firm, but most of the times, those people who say that their payouts were denied, I'm pretty sure a good amount of liability lies on them. Not everyone, but anyway. So for the people who might want a head start in funding, because I know there's people who normally ask me to copy trade for them, and I did tell you guys that in the past I've actually been like temporarily banned by FTMO for copy trading at some point. So that's why I don't do copy trading anymore. But HFT, that's fine. I can work on that. So we'll be doing that, and then you can get the live account and test the EA out with and get a payout, etc. So just to accelerate, because I know there's people who are telling me that this whole year they haven't gotten funded. So if I can get you pass a HFT account for you in like a month, phase one and phase two, hopefully. I think that's the average, Audrey, for your account. It's probably will be like a month. So if I can get that to you, and I come back from vacation end of January, but if I can get that for you, then you can use this EA and get your 3%, because I think Next Step Funded, they give you a max cap of 5% for the first 3 months. And that's good. For a 100K account, 5% is 5,000. Anybody who needs more than 5,000 a month that they didn't already have it, because some people are like, okay, what about the consistency rule? What about the cap? If you, the whole of this year, if you haven't made $5,000 a month and you're complaining about a prop firm having a cap of 5,000, then you need to work on your trading psychology. But if I can get you to get a payout of $400 a month, 300, $1,000, that is better than nothing. So that's the idea. So for those people who are still struggling with those getting funded quickly, possibly the HFT part is going to be for you. Also working on a system for passing other major prop firms, FTMO, for example. Like I did send that account yesterday that I actually literally, it's automated system that uses, it's another system, but this is FTMO right here. Yesterday I didn't even do anything, $600. I could have cut it off when I was up $1,000, but I'm working on this system. Now, this system should be able to pass the major prop firms, FTMO, E8, TFT, TFF, whatever. But in the meantime, the first one that I'll start with, and that will be after I come back from vacation end of January, will be HFT passing. And then I'm working on refining the passing for FTMO and all of that. So this is the trade right here. So if this does validate, the trade, the risk that I'll be counting will be 0.375% risk. Personally, I'm still going to go in again with 1% risk. EU, so you have two setups. You have EU and you have US 30. So just decide on which one you want to take. Personally, since US 30 validated first, or will probably validate first, that's the one that I will take. 2-1, and I'm in the US 30 buy. So 0.375% risk. If you do win this trade, you'll be back at break even because they will cancel out. Yeah, so if you guys have any questions, go ahead and let me know. If not, this will be it for the day. See. So what I want right here, I want US 30 to get to a 1:1 risk to reward, and I'll also take EU, but I don't think that's gonna happen because I don't want to jump in EU2 with 1% risk. I'll be going against my 2 trades a day cap. So I would want US 30. Audrey, no, I haven't bought that other one. I would want US 30 to get to 1:1 first. So just make a decision. So there's the EU trade that's about to validate, or did it? Yep, no, that's about to validate. So if you still have room in your leverage to take another trade, that's the EU trade right there. So this trade was based off of a 15-minute setup. Again, I hate looking at 1-minute candles. We don't care about this. So this is right. So you see, anybody who entered up here, this is why I tell you guys, wait for validation. Anybody who, or wait for retracement. Anybody who entered up here, they would have automatically gotten stopped out. So we don't need that arrow anymore. Then we have US 30. Let me look at something else. All right. Also one last thing, there are this accounts that I was using to test the year, and wait, let me first turn this system off first. Okay. Yeah, so meta quotes, because I was using Hugo's Way. I like the Hugo's Way demos, or I like them. But meta quotes removed access for some brokers. I think it's meta quotes. So the connections to the Hugo's Way demo accounts I was doing got taken out. So this is why if you guys have access to this MyFX book, you'll see that there's this banner right here. So I need to find another account to test. But right here, so this dip right here, this is the one that I was telling you guys, this shouldn't have happened. This is when I was stress testing it. So this was even before we came up with the requirements to stop trading like 5 days after a bias change. This was a valid dip. I even took this loss on my live accounts and challenge accounts that I was using the EA on. So this was when gold changed right here. We go to the daily bias. This was this dip right here. So I was in gold sales this whole time. I know we had the momentum indicator, but I was still trapped in some gold sales during this huge spike up because I was meaning to close them out right here, but I was trapped during this spike up. So this is the dip you guys see on this day right here, which was November 13th, November 16th. If we go back to the daily bias, that should line up here, right? November 16th. So this was valid loss that I took. 1, 2, 3, 4, 5, 6, 7. So if you guys remember, I mentioned today that previously I used to tell you guys, you shouldn't, like right now, I'm looking for buys. If I turn on the momentum, I shouldn't be worried about a sell momentum that comes up within 7 days of a bias change. Now, when I took this loss here yesterday or on this day, I looked at what day did this daily bias change. It was Tuesday, 7th November. Okay. What day, 7 days from then is 1, 2, 3, 4, 5, 6, 7. It would have been Wednesday, 15th November. So there's a discrepancy between those 2 dates. So I asked myself, the 7-day threshold, I was just thinking of a normal week has 7 days, Sunday to Sunday, right? Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Those are 7 days. But we do not trade, or the markets are not open Saturday and Sunday, other than say for crypto. So instead of the 7-day threshold, going forward, personally, it's not the gospel, but personally, I'll be considering 5 days after the threshold. So, or after the bias change. So if the bias change happened on Tuesday, then I need to watch for the next Tuesday, because those will be 5 trading days. So think of it as 5 trading days. So here, if I would have done those 5 days, it would have been 1, 2, 3, 4, 5. Right here. So I could have stopped either this Monday or this Tuesday. So either decide whether, if your bias change on Tuesday, so you can either trade until the next Tuesday or the day before the next Tuesday. If you started on a Monday, if the bias change on a Monday, you can trade from that Monday to the next Monday. Or I guess if the bias changes on a Monday, it will be close of business Monday. So it would be Tuesday to the next Tuesday or Wednesday if that makes sense. So 5 days. So 5 trading days from the day of daily bias. So here it would be 1, 2, 3, 4, 5. Worst case, if I wanted to do Tuesday to Tuesday, it would be this Tuesday, November 7th to Tuesday, November 14th. And you can see here, if we turn on the momentum here, I would have gotten the momentum sell and I would have closed my sales here at 1959. So I would have only lost maybe 1% because holding it up until the next day, you see the next day moved from 1959 to 1980. So some of these little decisions that I tell you can make the difference between you losing 3% when you could have only lost 0.5%. So this is why you guys need those whether it's 5 days, whether it's 3 days, all you have to do, just use this daily bias indicator, put it on a chart and visually backtest. So for me going forward, I know I'll be doing Tuesday to Tuesday, Wednesday to Wednesday, whatever, those 5 trading day thresholds. So a correction, I'm not going to be using the 7-day threshold. I'm going to be using the 5-day threshold going forward. So whether it's for gold, FX pairs, Bitcoin, I'll be using the 5-day threshold. All right, so US 30 is running. EU is in drawdown a little bit. So we'll see what this US 30 trade does. And I'll hang on till like 11 a.m. or maybe another 10 or so minutes. And then that will be it for the day. Display. What's up?
Yes, the EA, what account can they use on? Like 10K, 20K.
It's anything.
So
yeah, so I'm not gonna, based off of how this EA is crafted, there's not gonna be set files. I'm not gonna give set files, which is why I'll be recording. My goal is to get you guys to understand how each setting works, because that EA has like at least 3 settings that need your own psychological input as a trader. So it's ideally, what kind of trader are you? So if you think of 3, and this is how it's good, especially to avoid even copy trading. If you think of 3, I know I'm terrible at math, but if I remember correctly, in my statistics class, there was like there's X amount of probabilities. If you have 3 inputs that need to be changed, so you can have A, B, C. So if you change A and don't change B and C, there's a statistical amount of outcomes that are there. If you change A and C and don't change B, again, there's a statistical outcome. So you can use it on any account, 10K, 50K, 1K. So even on my demoing, every starting lot will probably be 0.1, 0.01. And if you guys have used ES before, you probably want to use it to use whatever lot sizes you guys were using on 100K on 10K. So whatever EA you guys are using, whatever your starting lot is, you should be able to use that on this EA as well. But you can use it on any account size, whatever it is, whether it's 10K, 20K, 200K, whatever. You just have to, increase the lot sizes if you want to. Does that answer your question?
Oh yeah. What was I gonna say? Yeah, you were saying you're saying you're not gonna give individual set files.
No, yeah, I'm not gonna give set files.
So when you do the recording, you're back testing a 10K, 20K, 50K. Would you back test that on a demo?
Yeah. So you want to first use demos until you understand how all the settings work.
Yeah. So like the broad, what drawdown is what's it called? What drawdown is bad? Like, what would you say is bad on a personal account?
By personal, you mean what? Like your own funds and not prop firm? That's a good question. I don't know. To be honest, for me, my thing is, again, I don't trade I don't trade buy and sell. So this will be my key right here. If my 5-day threshold hits, I close out. That's it. Right. So whatever drawdown I'm in will depend on this 5 days. So if during this sell, I would have made money selling this whole time. But on the close of this 5th day, whether it was this day or this day down here, whatever drawdown I was in between here, right? That's when I would close my trades. If I, on the other hand, you can use the bias change as your drawdown. The only thing for that is if you wait until the bias does change from bullish to bearish or bearish to bullish for you to close the trades, then your drawdown would be higher. Because the thing is, even when I'll be demoing it, I wouldn't be demoing it for people who trade buys and sells at the same time. That is not what, and that's why the name of the EA starts with trend. So you should either be using it as buys only or sells only. And then either when the bias, if you're doing sells only and the bias changes to bullish, you close out all your sells. That's it. That will be your drawdown. So whatever drawdown that is, I don't know, right? That will be dictated by the market. But again, you can see there's an issue with waiting for the bias changes to close out your trade. So which is why we have the 5-day threshold, which is why B, we also have the momentum indicator so as to tell us when the reverse momentum is coming in order for us to exit any buys or sells beforehand. So your drawdown will depend on what strategy you use to exit trades. Will you wait for a bias change? Will you do the 5-day threshold? It doesn't have to be 5-day. You can do 7-day. You can be. So that's what I'm saying. This EA will be tailored to your psychology. I can't tell you 30% is bad. You know, I don't know what. Maybe it can be 30%, but maybe if your drawdown here just by this one candle is 30% of your account size, then it's telling me as a trader, your psychology, you're a risky trader. But if this one candle would have put somebody at 30% drawdown, it also means that during this ride to the downside, they were also trading risky, and I'm guessing, and they probably banked like 20% on this move down. So it's not bad to be a risky trader. But if somebody comes and tells me, hey, Michael, at this point on the 5th day, my drawdown on a personal account was $500, then I would ask them, right, were you using the same risk when you were selling here? So if they say yes, then I know during this move down, they probably made 40%. So I'll tell them, okay, then just decide, are you going to close there? Are you going to close? So that's why I'm saying this EA will depend on your psychology as a trader. I can't tell you 50% is bad. I can't tell you 10% is bad because I don't know what kind of trader you are. Now, on a challenge, that's where maybe I can give you guidance. The basic one that I do, and this probably comes from the other group that, you know, I met some of you guys in, the daily drawdown for EA is about 3%. 3% is a bit too high now that I think of it. So what I would want to do, I would want to bring that drawdown down to max daily drawdown to about 2% or even 1.5%. I wanted to match my daily manual drawdown. Now, personally, as a manual trader, my daily drawdown is at 2%. So if I'm using an EA, I would want it to mirror that. So maybe 3% is fine. Yes. Maybe 2%, maybe 1.5%. I don't know. But on prop firms, that's where I'll be able to give a bit more guidance on how what's the max drawdown in any particular day you can give. But in a personal account, I don't know. I can't tell you that. You'd have to figure that out based off of what kind of trader you are. All right.
Yeah.
EU.
So yeah, you're right. What's it called? So do you know like personal account? So I know personal accounts you can't tell us because it's like like your personal account you can have, of course, you can have whatever drawdown you want. Of course you don't want big drawdown, but um what's it called? You let's just say you got 10K, just 10K, okay, 100K. Let's just say 10K personal account and you want to run the EA. What should be your drawdown? Because of course you don't want to have like bloody like 8K drawdown, something.
Again, I mean, I can't tell you. I don't know. What kind of trader are you? Let me answer your question with, so whatever you're asking, I'm demoing that. So because next year I want to have a huge personal account, like 100K
Yeah,
account. So
yeah.
I was demoing that actually on a live. Oh no, not live. I was demoing that, and I don't know if they took that off. I don't know if I had applied it here, but I'll show you. US 30. No, I don't think I ever connected it to my. This was the other one that I'd tried, but they took this one off because this was meta quotes. Anyway, so I was trying that, whatever you're talking about, because I'm prepping to
Mm,
have like 100K live. Now,
yeah.
my goal was I was using the 7-day threshold. Now, using the 7-day threshold on a 100K account, and I was actually risking my lot sizes were a bit huge. They shouldn't have been what I was using. But with the heavy lot sizes that I was using, and I was using, I don't know, maybe one lot or 1.2 lots on gold. I don't know. I don't remember. But with that one, I could have been making 15 grand a month, ideally 15 grand a month on a 100K account. But this drawdown, and that's why I wish they hadn't taken that off, because when they pulled the rug on Hugo's way, I lost even metrics on that. But my heavy drawdown on that particular day on that account, I'm telling you, those lot sizes were high. US 30 is almost at a 1:1. And I'm telling you, those lot sizes were high here. The max drawdown here was about 40K, 40K on a 100K account, 40K. Now, then when this change happened, what should I have done when this change up happened? The idea is that I should have closed out. I think it was 40, or let's just say it was 50K, just to have a basic one. So on the day this buy closed, if my trigger for closing the opposite trades, which would have been sells, would have been this change of daily bias here, then what I should have done, or if that's my, which is why, right, I'm talking about it will depend on your psychology as a trader, then I should have closed 60K in loss right here. So for that account, if that was if my habit was closing when the daily bias changes, 60K loss. In a 100K account, I would have lost 60K. That's by using that. But there are people who are going to find it hard to close 60K. And guess what? During this move up, they would have blown a 100K account. But that's only, those lot sizes I'm talking about were huge. Now I know I shouldn't have been doing like 1. I don't know, maybe it was 1.4, 1.3 on 100K. Okay. Now, let's say I was using 1.2. Again, they took that out, so I don't even have access to it. So instead of 1.2 lots, then I think the sweet spot, if I ever do get my 100K account, is maybe 5 times less than that. Because if I can make 15K a month, that 60K drawdown is with making 15K a month. So if I can make 15K a month, I divide that by 5 and say, is 3K a month good for me on a 100K account? Yes. Okay. So if my drawdown was 60K by using maybe a 1.2, then I divide that by 5. That would give me, again, I'm terrible at math, 2. So I'd be using like what, 0.25, I think 0.25. Yeah, 0.25 lots for a 100K account. Now, divide the 60K drawdown that I would have had by 2. No, by 5. 60K divided by 5 is 12. Is 12K drawdown good on a 100K account? Yes, perfect. Okay, then I know I've worked up my lot sizes. US 30 is at a 1:1. Go ahead and set break even. So now is when, let me see where EU is. Now I can enter EU because US 30 for me is risk-free. Give me 1 second. I'm at break even for US 30. Okay, let me see. If EU is still at entry, if EU comes down, I will enter it. But if EU comes back down, I'll enter it. Okay, where was I? So I was on this one. So
Yo,
now I've
1 second.
worked on the,
Yeah, just one thing. You know the account management. Before we start, basically, you know, the account management. You know, when you do that, not you, like I'm saying, like, you know, like how people they offer those services like account management stuff like that. But most of these guys, they don't know how to trade. So I lost like 200Ks. Of course, you shouldn't trust them. But when I did it, of course, it looks legit, but then they flop. Of course, they don't know how to trade, so they'll just blow your accounts.
Mhm.
So stuff like that. Um, yeah. So you're not gonna
No, I'm not.
manage. Yeah,
I'm not gonna do account manager. I have the EA is gonna be an account manager. I'm not gonna manage your
no, no, no.
accounts.
Yeah, I mean
I will.
like
Mhm.
yeah, I mean like
I'll only
yeah,
do challenge passing. I don't do account management.
yeah, yeah. I'm just saying like what will it just be like challenge passing and stuff like
Yeah, it would just be challenge passing. That's it. If I can do account management, but it
yeah,
will be the same. If I was doing account management, I would be using the EA, and you guys have access to the EA, so there's no
yeah,
reason for me to use the EA and you guys have access. No, I'll just be passing the challenges, starting with the
no,
HFT
yeah,
challenges, and then
yeah,
possibly
yeah,
move to FTMO.
yeah, yeah. I'm not saying like you're gonna flop or something. I'm just saying like what's happened in the past because it's been like some crazy stuff. You know how this stuff happens, like people would
Oh
just
no, I've been
yeah,
there. I've been there. I've had people manage my accounts when I was first trading. They messed up.
mm,
And you're right. A lot of people who offer and let me
mm,
even right
yeah,
even people who talk about FTMO is it's not easy passing FTMO or this main prop firms account.
mm,
Somebody can be a good trader, but one major issue is copy trading. You will be flagged for copy trading. That's number one.
yeah,
Number two, a lot of people just want to make money from that. So a lot of these people who and even when I'm offering this HFT passing, right? I am honest with you guys. It's not my EA. It's another system that's doing that. It's not my EA. But even when some of these people advertise account management or challenge passing, they actually use like the banner for FTMO or whatever. But if you give them an FTMO account, they cannot pass it, right? They'll fail it. But if you do the challenge thing, they'll tell you, oh, go get an account with NSF M Solutions, right? And that's HFT passing. That is right. That it's just
yeah,
marketing. For me, I'm not a salesperson. I'm not a marketer, right? I'm terrible at those things. But for me, I'm an honest person. I see this and I see through it. So that's why for me, like I'm honest with you guys where I tell you, hey, for this HFT passing, it's not FTMO, it's not TFT, it's not any of these big pro firms. But am I working on a system that can hopefully pass FTMO, that can hopefully pass TFT, E8? Yes, I am. But the HFT one that I'm working on, that, I'm not going to be out here saying I can pass your FTMO challenge, which is why I don't want to talk about passing FTMO. Now, if you want to talk about passing NSF, whatever, NSF, M Solutions, sure, that we can talk about, because I want to be honest with you guys and also tell you whatever I'm using to pass those is not my EA. But I want to get you, because I can get those accounts passed quickly for you guys. And then if you have my EA, you just go for like $1,000 profit, which you should be able to make with the EA, or even 300, 400. Because the other thing with these pro firms that allow for HFT,
mm,
you don't get your challenge fees back. So, right, that's why I'm also, as you said, I've been there. I've been scammed. I've pulled funds together for somebody, saying, let's all put in money together and I'll pass FTMO for you guys. The guy didn't even pass phase one. I've been through so that's why for me, I have nothing to, right? I already make money trading. I'm not really looking to make money yes, I'll make money selling my EA. Sure.
yeah,
Yes, I'll make money doing the HFT passing, and that I'm gonna be honest with you guys about. But I think I've developed a product that will help you guys. If you have passed that HFT account, it should be able to give you enough profit that you should be able to recoup your challenge fees and all of that. But I've been there. Whatever you're talking about, I've been through the whole thing, through it all. I've been scammed. I've been through it all. So yeah, so I want to be my main thing is just to be honest and say, okay, for this one, if if I'm passing challenge, it's not FTMO, it's not E8 for now, but it can be next. They're the same. A lot of people are fixated on FTMO, whatever. Yes, they're the best, but in terms of what, if you cannot pass, if you cannot get paid out using FTMO, or if you cannot even pass a challenge using FTMO, you cannot pass a challenge using Next Step funded. You cannot unless it's HFT. But if let's assume you have, let's just assume you have a live FTMO account funded, and you cannot get your first payout. It doesn't matter if I pass a HFT NSF for you. You will also not get a payout with NSF because it's the same thing. It's just branding, right? FTMO versus NSF. So my goal is for you guys to understand how the EA works, how my manual trading works. And then if I can get a challenge passed for you by HFT using Next Step Funded or whatever other prop firm I choose to go with, then you can use either my manual trading methods or the EA to get your payout. Don't go for huge payouts. First, just gain that consistency. And then move on from there. The rest is just noise. And then if my passing system for FTMO, E8, or TFT or TFF does work, right now it has like a 50% accuracy. But if it does work, then I'll be like, okay, I'll do FTMO passing. And if I'm doing FTMO passing, it will literally be FTMO passing. It won't be like, be like, okay, I'll pass your FTMO challenge. And then you come to me, I tell you, no, go get an NSF challenge. Nah, that's just, I find that just predatory. It's just prying on people's hopes and ambition. And I hate that shit. But anyway, people are different. I'm not a salesperson. I'm not looking to make a ton, I'm not looking to make money from passing people's chat. And I actually hate passing challenges because people, you're carrying somebody's expectations, and some people don't understand that it takes time. Some people want it done like quickly. I'm not, if you guys haven't noticed, I'm not like I'm not like a risky trader. I'm a very conservative trader over time. But anyway, let me finish up on that one thing I was talking about for the 100K account. So for that 100K account, and you can deviate to like as a 10K account. So right now, if I ever do get my 100K live, and I mean like 100K of my own personal funds, not a prop firm, I know that I'm not going to be doing 1.2 lots on gold. Okay. So I know that I'll probably be doing 0. What was it? Divided by 5, it was whatever that was, 0.2, 0.15. And then I know that instead of having a 60K drawdown, I can have a 12K drawdown. Okay, then I'll know in future, instead of waiting for the 7-day threshold, I'll wait for the 5-day threshold. So if after 5 days of my bias change, I get a momentum signal on the opposite side of my bias, I'll close out the trades. So for example, here, during this day, we do count those 5 days, 1, 2, 3, 4, 5. On the high of this candle at 1945, I think on that 100K account, even when I was using the heavy lot sizes, maybe my drawdown here was 12K or 15K. Divide that by 5. If I was to use the lower lot sizes, my drawdown would have been 3K. So actually, I can still use the 1.2 lot, but then I can tell myself I'm only trading gold or US30 for the first 3 days of a bias change, and I'll stack and use that 1.25. The thing is, the bigger the lot sizes you're using, and I'm talking in regards to my EA, the bigger the lot sizes that you're using, the fewer the days that you should trade after your bias change. So you can still do a 2-lot trade on gold, but if you're gonna do that, only trade on the first 2 days or on the first 3 days of your bias changing. If it gets to day 4 and your threshold was day 3, close out those trades. And if you get a momentum signal, close out those trades. Because if you're trading using a 2-lot, your account will get, that 100K will get burnt if you keep holding. So right now, right, it's about, and I'll talk about that in all of the recordings, find the sweet spot. Number one, find your daily bias. You can use my SAR indicators. You don't have to. Find something else that tells you in the next X amount of days, gold will be pushing up, gold will be pushing down. That's step number 1. Step number 2, wait for the bias change. Don't just hop in. So if whatever you're using as a bias gave you that gold was pushing up 3 days ago, and today's day 4, and you just got the EA today, don't put on the EA I mean, you can, but if it were me, I would now wait for whatever I'm using for my buyers to tell me that gold is selling, because you want to start your EA on that day the bias changes. Because remember, that is the day the probabilities are high that price is going to start going in that direction. And then, right, step number 2, decide what will you use to tell you when to close out your trades. So if you're doing buys only, if you're doing sells only, what will trigger you to close your any open sales or any open buys when your bias changes? Is it going to be the daily SAR closure? Is it going to be the momentum indicator? Is it going to be a 5-day threshold from the daily bias change? Is it going to be a 7-day threshold? Then you decide on that. Once you decide on that, everything else is just, so that's what, and that's why I'm saying it's going to depend on your psychology as a trader. Their traders are going to have all those rules. They're going to be like, okay, I'm only going to trade the first 3 days or the first 5 days of our daily bias change. And you know what's going to happen on when that threshold is complete? On that day, they're going to be like, oh man, I'm like 2K in drawdown. I think I can hold this. Those people are going to they're going to blow accounts back to back to back. At some point, they will blow more. Yes, sure. Even a person like me who has who's following everything to the letter, I can still blow an account here or there. But I can guarantee you, I'll blow less accounts than such a person, because what's going to happen if you start, it's the same thing with my requirements for manual trading. If you break that small rule that you're afraid of closing in drawdown because it's only 2K and you think that gold is going to come back down, all you have to do is look at the chart. So for somebody here who was using a 5-day threshold, 1, 2, 3, 4, 5, and they had like a 1K drawdown here, right? They were in sales. They had the 5-day threshold, and they were like, okay, on day 5, I'm gonna close my sales here. Let's say they had a $1,500 drawdown or 2K, and they're like, okay, you know what? No, I'm not gonna close it. Gold, I'm gonna wait for gold to come back down. All you have to do is look visually. So somebody who held that, the next day, gold pumped up, $15. Okay, they're still holding, think it's gonna come back. They add some sales here. What happens to gold? Comes back down a little bit, spikes up. At this point, if they're using a prop firm, they've blown an account, or they've reached instead of losing 2%, maybe they closed at 4.9%. And that's a big difference. 4.9 minus 2%, that's 2.9%. So this person would have either blown an account or lost an extra 2.9% just for the mere reason that they hoped gold would come back down. And I know a lot of people are going to do that. I've been there as a trader, but nowadays I have my threshold. If my threshold is 5 days, and I get that reversal with the momentum indicator, I close. I do not care. I do not care whether it's a $500 loss. I do not care whether it's a $2,000 loss, because I know in future, gold is going to give me another entry. So here, if this person would have closed here at like minus 1K in drawdown, and then they waited for gold to go bullish, look at this whole time, they would have been in buys for gold. And at this point, they would have made back that 1% loss they took here. They would have made it back and more. So that's the idea. The idea is find your thresholds. What's going to make you close the trades, and follow that, stick to it. Whether it's $500 drawdown, whether it's 3K drawdown, don't trade on hope and think that you're going to come back and you're going to gain profit. Everybody loses in trading, whether it's hedge funds, whether it's even professional traders, everybody loses. So the sooner people who will use this EA understand it, the more successful you'll see people doing. But in short, right, even with that 100K account, now I know the lot sizes to be using in future. I know now I need to reduce my threshold from 7 days to 5 days. And then what, for me personally, when am I going to be closing my buys or sells only? I'm going to be closing them either, whichever comes first, either the 5-day threshold that's accompanied by a reverse momentum signal. So if I'm in buys only, so for example, right here, gold is a good thing to give a demo with. So right now, even with some of my challenge accounts and some of the live accounts I have, and personal accounts I have, I mean, buys only for gold. But then here I'm counting the days 1, 2, 3, 4, 5. It's 5 days. So the bias changed Tuesday, November 21st. So the next Tuesday was yesterday. So it depends on how you're counting the days. So it can either be the day of or after. But if you're doing Tuesday to Tuesday, so it's Tuesday, November 21st to Tuesday, November 28th, which was yesterday. So those are your 5 trading days. Now you ask yourself, here, if I turn on the momentum, because I've configured it to do sells only, if this candle closes below, US 30 got taken out at break even. If this candle closes as a bearish candle, and hopefully we can see that, or if it comes back down a little bit to become a bearish candle, this is actually forming a sell momentum entry. So here, if I do get that sell momentum, you know what I'll do? I'll close out all my buys. It doesn't mean that gold will start selling immediately. Actually, I do see gold taking out the all-time high also, because we are like $10, $20 away from the all-time high. But just to be safe, if I do get that sell here, I will close out my trades. So it can either be the 5-day threshold and then you close it, or it can be the 5-day threshold plus the reverse momentum, or whatever. So whichever comes first. So for me here, it looks like the 5-day threshold will come first. So I'll just go ahead and close out whatever buys I have on gold. The other one can be the 5-day threshold plus the sell momentum. So it can be, I wait. So I've already met the 5-day threshold. So maybe I wait for the sell momentum on the daily. Okay. What's the other trigger that I can use? Now, this is in order. So the 5-day threshold will be safer. You will have lesser drawdown. The 5-day threshold plus momentum, in some instances, it will be the less safer one. It will be almost equal, because right here today, if this daily candle on gold closes as a bearish candle, it will align with the 5-day threshold as well. Actually, wait. If this was the 5-day threshold, I should have closed the buys the close of business yesterday. Actually, yeah, never mind. I should have closed the buys yesterday. So the 5-day threshold by itself will give you the least drawdown. And I'm actually glad you guys asked, or Invest, you asked that question, because I need to write this down when I'm doing the recordings. So the 5-day threshold will give you the lowest drawdown. The 5-day threshold plus a reverse momentum will give you the next best lower drawdown. It might be similar to the 5-day threshold drawdown, but it might be just a little bit higher. Now, because right here, if this closes as a bearish candle, there will be a sell signal that will fire here, and I'll just close all my buys out. Now, the one that will give you, now this is a balancing act. The one that will milk all the buys or all the sells in any given trend is if you use the SAR closure on the daily for it to tell you whether to close out trades or not. Now, what I mean by that is, for somebody who's using the daily SAR closure, they would keep buying until a daily candle, a daily sell SAR is formed and a daily candle closes below it. So for them, they don't care. They're just joyriding this whole, they're milking this buy trend until they get something like this right here, right? They get a daily candle closing below a sell SAR. Now, that one will give you the most optimal profit. However, it will also, just as much as it's giving you the most optimal profit, it will also give you the highest drawdown. Because same thing right here, for somebody who was selling this whole time, they would still be selling even. So here, let's go over those 3 scenarios right here. So let me just do a replay. So on this day, scenario 1, on this particular day, those 3 people, so the person doing the 5-day threshold, the person doing the 5-day threshold plus a reverse momentum, and the person doing the daily buy SAR to daily sell SAR, they all start doing gold sales right here. Okay, so let's count the days. So that day was Tuesday. So we need to look at Tuesday, November 14th for the 5-day threshold. So all of them, they're making money during this gold sales. Okay, now right here. So Tuesday, November 7th to Tuesday, November 17th. At this point, the person who's using the Tuesday to Tuesday threshold, those 5 trading day threshold, at this point, they say I'm out of the market. I've met my 5-day threshold, I'm out of the market. Now, at this point, let's also do, because here it was for sales, let's do the buys so that we can see when the buy momentum changed. Okay, so at this point, that person says, I'm out. So they close in drawdown. So whatever sales they're in here, they take them out, they take the loss, and they close in drawdown. Now, the person waiting for the 5-day threshold plus momentum, they're still in the trade too, because for them, they're like, okay, it's the 5 days, but for me to get out, I'm waiting for a buy to show up after the 5 days. So you know what? They're still waiting. Look at when the buy shows up. The buy shows up when they are $20 more in drawdown than when the person who exited with the 5-day threshold was in, right? So this person at this point, I think their max drawdown would have already gotten triggered before the fact, if that makes sense. So I think it would have already gotten triggered. But at this point, when they got this buy, they now say, I'm done. I'm out of the market. Okay. And you also see we have a buy SAR that formed. Now here, who's left in the market? There's still that one person who says, I'm still in sales on gold. And you're right. I've seen instances where this buy is forming, because remember, SAR, stop and reverse. Gold could have easily tapped this and reversed back down. I've seen situations like that. But you have that one last person who's like, okay, for me to close my sales, I need a daily candle to close above this buy. And you know what? They're still in the trade. So when they see this rejection, they still, they start having hopes that gold is gonna start coming back down. Even for me at this point, I was expecting gold to start coming back down. Even with the stress testing account, I was still expecting gold to come back down. But look at what happened. Gold spikes up and closes above here. So this person ends up closing the sales. Let's say they're using a personal account, because with a pro firm account, there's no way you would have survived this whole move up here. The only person who would have survived is this person who used the 5-day threshold. So at this point, they get taken out. I think they would have already been taken out way past that. So I hope that example shows you how drawdown can increase based off of what you use as your decision maker to get out of trades and get in trades. Does that make sense? So for me, I'll be using the 5-day threshold, because as you can see now, there's days that it also works in reverse. There's days when that person who's waiting for a daily candle closure will make more money. There's days like that. But for me, I am.
What was it again? You said
there's days when that last person who uses the daily SAR candle closure will make more money than this too. Because remember, the higher the drawdown, it means the higher the risk. So high risk, high reward. So this person who's using the 5-day threshold, because that was just because keep in mind, when I'm back testing, I normally like looking at the worst case scenario. But there are days for the person who was using those cells. A good example is here. So this person, Wednesday, September 6th. So let's 5 days, 5 trading days. It would be Wednesday, September 13th. So right here. So this person would have closed out the sales right here. Now, this retracement wasn't big. This was a $10 retracement on gold. That's not too bad, unless you're using heavy lot sizes. So this person would have gotten done with their sales here. But the person, this guy who's like, until a daily candle closes above, I'm not closing my trades. So this person, the last person who's looking for a daily candle, you see what happened here, which is what I was actually expecting to happen in the explanation I just showed you. It tried to close above, but didn't. So this person who's still holding until a daily candle closes above a live SAR, they're still in sales. And you see, they would make money in this whole retracement back down and back down. So when those two people who were looking for a reversal based off of the 5-day threshold, they are out of the market. They're just getting into the market again here. This guy made money from this retracement and is now banking and banking and banking. So it just depends. Waiting for using the daily candle closure as your threshold, yes, you'll probably make more money than this other two people, but there are days when you lose a lot. But that's for risky traders. For me, I'm not a risky trader, so that would only work for high risk traders. But you can see that sell signal right here. So for this one, this would meet the 5-day threshold plus the reverse momentum sell. So anybody who's like a conservative trader, they would be closing out their gold sells or their gold buys only today, like me. End of day today, I'll be closing out any gold buys that I do have. All right, US 30 got stopped out at break even. So at this point, not unless EU, I might take EU, but given time of day, I'll just wait for another setup later on in the day. So yeah, so today we'll just stick to that loss we have. If I do see another trade setup, I'll send it. But yeah, that will be it for the day. Any last questions?
No, bro.
Okay, perfect. All right, guys. I'll catch you guys tomorrow. Stay tuned in the Discord for any updates that I'll give.